How does your experience specifically benefit teaching members in this market environment? That's a really good question. But folks, I mean, there's not many times throughout history where the market has gone down more than 20% in a single year. You literally have 2020, 2018, 2008, right? I traded through 2008. 2008, between 2008 and 2009, the S&P went down about 55%. And I traded through that environment. You know, that's the time that I was working at the fund in New York. So that's where I was trained in that environment. 2008 is also the same year that I received one of the Trader of the Year awards. I've been through this kind of environment before. I've seen this type of volatility. I've seen this type of uncertainty. And what you have to realize about stock market crashes throughout history is that they're the same, but they're different. They're the same in the sense of the way in which the stock market reacts. The only thing that's different is the catalyst and the reasons for the markets to react the way that they do. In March, when we were talking about when the market started to bounce in March, I was literally screaming at the top of my lungs that this is a bear market rally. That I said the bottom, I do not believe is in yet. I do believe the markets are going to go lower. And you go back and watch any of my live streams from the second half of March. They're all here on this YouTube channel. Don't take my word for it. I'm not a Monday morning quarterback. Go read them. Go watch them. Okay. In the second half of March, I told you guys, I continue to tell you, I do not believe that the bottom is in. I do not believe the bottom is in. I do not believe the bottom is in. And sure enough, what happened over the next month? Well, the bottom was not in. The markets continued lower to the downside. I still do not believe that we are necessarily out of the woods yet. I do believe that the market's going to go back down. I do believe the S&P will go back under 4,000, which is what you want. We started adding in our long-term portfolios underneath 4,000 on the S&P. That is what you want. If you're a long-term investor, you want the market selfishly. You want them to go down so you can get better entry points on all the companies that you love so much. I very selfishly do want the markets to go down. I do not want the markets to go back. I don't want the SPY back at 460. I want the SPY at 370. That's my thought process. That's what I think. And that's how I'm positioning myself. And that's how I'm managing my own money in that analysis. Okay. So I hope that helps answer your question. That is a good question.